If there's nothing else that you take away from this presentation over the next 15 minutes, I want you to remember 4 things. This is a large, high-grade resource. It's open in every direction. I've currently got 2 rigs turning with a third on its way, and we've got a resource upgrade scheduled for the 4th quarter. So in the presentation, you'll notice the aerial view right here of where we are at Pickle Crow. It's a great aerial shot in the sense it shows you to the left-hand side the core sheds, or core stacks I should say, to the right-hand side the core shed, which is heated with other bits and pieces. What we have now that's addition to this is some 24-man housing for all the drillers that are currently on site. Up to the top left-hand side, you'll see where the old mine was. There's the obligatory forward-looking statements, and I will be making a few of those, so please read that. This is an exciting project. This was a forgotten, unloved, does it remind anyone of anything? It's like a Bellevue Mark II. This has been, since 1966 when it closed, has been basically untouched and not much work has been done at all. Why was it closed? It was closed not due to lack of mineralisation. It was closed because gold had reached 35 US an ounce. And over the ensuing years, they had small, ad hoc approaches to mining there. Not much drill work was really done. People grabbed little bits of territory, but didn't really pull it all together until about 2007 when Pickle Crow listed on the Toronto Stock Exchange and pulled all of this together. But unfortunately for them, the GFC hit and they ran out of money. First Mining, our current partners, picked it up, and then we picked it up from them in January this year. So as I say, we've got the 2 diamond rigs drilling as we speak, with a third on its way. It's a low-risk exploration play here where we're focused on rapidly developing up our resource base. As you can see already, as Paul mentioned, we have 830,000 ounces at a staggering 11.6 grams per tonne. That is our modus operandi, what we did at Bellevue, what we're doing here at Auteco. We go after big things, and that's what we hope to do. We're well funded. We just recently raised over $30 million, and we have 33 at the end of June cash balance. Here's the team. This asset will always remain an asset unless you have the team to exploit that. And we have a great asset, but we have the best team I know going around that can exploit it. Paul mentioned my background, but we have Steve Parsons, non-executive director, current managing director of Bellevue, and Mike Naylor, who we mentioned before, Sam Brooks, who's done most of the geology at Bellevue, and of course we have our senior chief geologist, Marcus Harden, who's doing great stuff there. Getting such a great high-quality resource so quickly is not to be ignored. Some corporate snapshots here. We're currently trading at 21 cents. We have a market cap over $300 million. What's really important from this slide that you should take away, management and right down to staff, our secretary even owns stock. They've got skin in the game. And I want you to understand that. The institutional base that we're slowly growing, we're getting the foundations for this quality register through increasing institutional take-up. We have 18% of that register, of our register, with Australian and international institutions. This is where we are. We have great infrastructure. So we fly to Toronto, from Toronto to Thunder Bay, daily flights, and then daily flights again from Thunder Bay to Pickle Lake, and it's a short 15-minute drive from there to our site. We've got grid hydropower, sealed roads, daily flights, as I mentioned, all year-round exploration. So if at any time, right now is probably the hardest time, the great thaw after winter, but we're still managing to I'm glad to say, drill. So this is where we are in this Uche sub-province. It's really spectacular. Look at these neighbours that we have. We have Evolution through Red Lake, some 20 million ounces. Musselwhite to our north with Newmont. Springpole, our First Mining gold partners. Marsden, Pure Gold, and West Red Lake. And you'll see also there the Dixie project from Great Bear. Great Bear having a market cap substantially greater than ours with no resource yet. Again, we're trying to unlock this great potential here. I've mentioned to you before, this is one of the greatest producing mines at its time. Between 35 and 66 last century, they produced over 1.5 million ounces at 16 grams a tonne, not to be sneezed at. I say again, they didn't run out of mineralisation, they just ran out of a gold price and it was uneconomic to continue. We have the geological, structural, and a lot of data going from those times. So if you can imagine, we've got 30 years worth of data, and all of that makes for great positivity to get our mineralogy right, our recoveries, we know what they will be. And what's more is, now that we know what we've got a lot of low-hanging fruit to go straight after. And that's really important for this people to understand, that some of the stuff that we've got, the 830,000 ounces, it's 11.6 grams a tonne. On top of that, a lot of the stuff that we've been talking about is outside that. So some of the thing I'm talking about today is quite remarkable. That's outside of that resource I mentioned. It's quite staggering. Here is where we're actually exploring at the moment, which is in the shadow of the head frame. You'll see there's the blue line there, you can see that, and that's basically where we're drilling at the moment. But you'll see, as we progress out, that there's other places we can go, which is a little bit further out, very brownfields, and further out from that, we'll go regional. I love this slide because it's a cross-section of where we are, and you can see here that from 35 to 66, it had numerous shafts going down. It's got something like 38 kilometres of underground workings. In my mind, in today's value, that's about $200 or $300 million worth of underground workings, which we pick up. We have, right? And we have all of that data, all of that core from all of that work that's been done. Here you'll see the advanced resource targets that I mentioned before. So the things that we're really looking to do, that's within the current inferred resource, these veins 22, 23 that we're following up now, vein 9, vein 12, you can read those for yourself. You can see how spectacular all of those are, and that's just a minute part of what we have. You'll notice here, we've got this brownfield, so outside that blue box, there's other areas we can target. There's areas here, I might mention to you, that's like 10 metres at 50 grams, 10 metres at 17.5 grams. We've got 1 metre at 400 and another metre at over 800 grams a tonne. These are spectacular. And this is not unusual for this area. This province here is a very productive province, but you can read through all of those areas that I just talked about. And the areas all around here that we can go and target. It's quite remarkable. Here we've got a regional scale play too. So if you look at this map on the left-hand side of the page in front of you, you'll see a small shadowed area. That's where we are at the present. That's the shadow of the head frame. I'm just going to repeat that. That's where we got our 830,000 ounces at 11.6 grams. We will go after all of these other, and that strike length is about 4 kilometres. Then we go out regionally. We've got strikes with some of these hits that you can see there for yourself. 2 metres at over 60 grams, over 4 metres at 7 grams, 36 metres at 1.5. And that strike length is 15 kilometres. So we've got more than enough. I'm spoilt for choice, in fact, about what we can do from here on end. So what have I got here for you? I've signed this agreement with First Mining, the right to earn up to 80% of a high-grade project. Right? For that, I paid $100,000 Canadian and 25 million shares. Furthermore, I've got to spend $10 million in the ground over the next 5 years. We will knock that out of the park. We will spend the first $5 million this year alone and earn up to 51%. I've got that maiden JORC resource 6 months after acquiring the project. I've got an upgrade coming as well in the last quarter of this year. This is a very underexplored area. I've just mentioned to you before how prolific this area is, how much data I have, what great core I've got to work with. As I say, I'm spoiled for choice. Again, I want to emphasize I have one of the best teams going around. We've done it before and we'll do it again. It's a near-term exploration in the third quarter, as I say. You'll see continuous news flow from us. This slide shows we've upped the drilling campaign from 5,000 metres to 10,000 metres. And if we continue to find the things that we are already finding, we'll keep drilling. We won't just stop there. So we'll do this in this next quarter. You'll see further follow-up drilling, assay results, and in the fourth quarter, you'll see a resource update from us. And that's it from me.
Thanks very much, Ray. Just a couple of questions have come in. I'll put those to you now. I should have reminded our listeners and viewers that, in fact, Ray is coming live to us from the Resources Rising Stars Sydney studio. So it's a first for RRS to have a national link-up like this, so a fantastic achievement. Ray, you did touch at the end of your presentation on the impending news flow. Can you just elaborate a little bit? There's been quite some talk around in the market that drilling results are imminent from Auteco. Is that correct?
Yeah, it's a great question. And it's one that really is dear to my heart, in the sense that what we're trying to do here is we won't just throw out 3 or 4 great intercepts and hope the market grabs onto that. That's not what we're about. We're about pulling together quite a few holes, quite a lot of assay results to make sure this resource hangs together. It's got to hang together. It can't just have 1 or 2 holes, spectacular grades, and then it all falls away after that. This is about us providing to our shareholder base and potential investors that we're going to put something together that all hangs as one big ore body and multiple loads as well, presumably. And
Ray, we've also been asked, do you expect to follow the Bellevue model whereby you grow the total resource inventory significantly bigger than it is now before and then going for an indicator resource, or do you expect to do those in parallel?
No, it's exactly right. So that's been our philosophy from day one. What we did at Bellevue, what we're doing now at Auteco, is we're not after just getting 800,000 ounces. That's not our modus operandi. Our modus operandi is to try and get multi-million ounce deposits and then prove those up, and then we'll go to the indicated category.
And do you believe that there is scope to get an inventory of the size of Bellevue plus, 2 million ounces plus at Pickle Crow?
Well, yeah, I'm sure there are a few people at Bellevue that would hate me saying this, but my intention is to be bigger.